It's not just the down payment. There are a lot of other things associated when you're going to make this payment for your property. All right, this is the biggest investment in your life, and it is. So I think it's very important that you know what you're paying for. Hi, and welcome to the show with your host, RJ Curington, Curington Law, Real Estate Planning, and Business Lawyer. And this podcast is about business and about real estate, about estate planning, about building your empire. As a wealth lawyer, we serve a multitude of different investors, buyers, sellers, and we're also a friend. So today, we're going to talk about closing costs and what to expect at the closing. When you're going to pay this amount, or your down payment, it's not just the down payment. There are a lot of other things associated when you're going to make this payment for your property. All right, they say it's the biggest investment in your life, and it is. So I think it's very important that you know what you're paying for. And this is what we go through at the closing. And I always go through it first. You get what's called a settlement statement. And the settlement statement includes all the costs that you'll need to pay at closing. And you'll get this either like 2 or 3 days before closing. And you'll also get a closing disclosure from your lender. That's the same thing. But this settlement statement is very similar to the closing disclosure. It's just from the title company. So we'll just walk through the line items of what's included. I'm going to try to be as thorough as possible. So when you get this settlement statement or master statement, some call it a HUD, but it's really just the ALTA. All these are all mean the same thing. They're just the closing costs. So your name will be on there, your current address, and the seller's name and their address, property address, and lender information. That should all be on there. The settlement date and disbursement date should be the same. Okay, and that settlement date is really just the closing date. All right, and then there should be an escrow number, et cetera, the title company name, et cetera. And so you have the seller numbers, you have the borrower numbers. All right. What you're going to see is the purchase price. All right. You'll see the earnest money that was deposited, and that earnest money is the good faith intention to deal. So if you don't know, now you know. And that money is just implemented into the closing. All right. So you can keep that money without having to have it returned and then provide it again. So that's already being credited. All right. And in this statement, there's going to be like a debited and credited section. All right. If you're the buyer looking at this or listening, then pay attention that the debit is what you're paying out. The credits is what is deducting your cash to close, which is the bottom line. And then for the seller, same thing. You know, the debits are what you're providing, and then the credits are what's being included in your proceeds. Okay, so I'll just go through the buyer side first. So you have your loan and seller credit. If you were negotiating any seller credit during the attorney review process or during any pre-negotiation or pre-contract negotiations, all right, you should have prorations. Okay, so depending on what state you're listing from, you'll have either a tax that's provided in arrears. So you'll have the requisite tax prorations from the closing date to the beginning of the year to the closing date, and you'll have that provided. If you negotiated any increases, then you'll want to make sure that that's calculated appropriately. So something to look out for. In Illinois, it's in arrears, and so you have it's 2026 at the time that you're listening, or at the time that this aired, and the 2026 taxes are going to show the 2025 tax year. So the time the seller was in the property, they're going to pay for that time, and they pay for it at closing with the credit. And so you'll have that reflected in the closing statement, and you'll have it for either one installment or two. Make sure that that's calculated correctly and how you negotiated it. There should be one for any year that's unavailable, or the tax bill that's unavailable. Because people say, oh, why do I have to pay for the tax bill when the tax bill does come out in the next month or the next administration of the tax bill distribution? then you're going to ask, hey, why do I have to pay that? And you'd be right. Why do you have to pay that? And you have to pay that because the bill is not out yet. And so the seller is just going to cover it. Okay. They're going to prepay the taxes. All right. Then you have the assessment. If there's a condo or something like that, you'll have that prorated. All right. Or any lease or rent or anything like that, that'll be provided in the prorations and adjustment section. All right. And then any like lender credit, things like that. Okay. All right, and then just for convenience's sake, for the sell side, it's going to show that you're providing that in a debit, okay, and then receiving the amount for the assessment in the HOA, okay, or homeowners association fee. All right, then you have your loan charges. So I'm not a lender, so I can't really speak too much to like exactly what these things mean, but generally I can provide some of the line items. So you have your loan fee, you have your administration fee, you have your processing fee. And these all range, but they're typically all in the same area or amount. Then you have your appraisal fee, which is often paid outside of closing, and that appraisal fee is covering the appraised value of the home. And lenders require, so they'll require that be paid. And typically the appraisal is done after you're under contract and after you're feeling comfortable with moving forward with the transaction, after signing and providing the earnest money or initial deposit. All right, you have a credit report fee, a flood certification fee to make sure you're not in a flood zone. Some state this matters more than not and can be a little bit more expensive, but sometimes if it's not in a flood zone, then it's going to be like $10 or so. All right, prepaid interest that already goes into your mortgage. All right, so that's wonderful. All right. And it's a cost per day from the closing date to the first date of payment. Okay, for your monthly mortgage. And you have your homeowner's insurance, all right, and your property taxes. So in Illinois, I'm not sure about other states specifically, but it should be universal. For homeowner's insurance, you're paying, or you can elect to have an escrow for your homeowner's insurance and property taxes. And that just means the mortgage company or bank holds money in escrow, and you can pay into it each month to pay for your taxes and your insurance. And I learned that this really happened because for taxes especially, people weren't paying them. And so they were past due and people were collecting on the taxes. And that's the one thing that can trump a mortgage from if it's in foreclosure or something like that. If there is a bankruptcy or that leads to a foreclosure, then the bank would be the first person to get paid off. But the only thing that trumps that is taxes. So really the lender is concerned about that, and we'll talk about that in title fees, but that's why there's an escrow. And it also is very convenient for the buyer to just make those automatic payments, and the property taxes and home insurance are paid off when they're due. All right, so that's that. And then you have your aggregate adjustment, which is just the cost from the lending side. Okay. Now we get to title charges. So you have endorsements that the lender requires to make sure certain things are met. And a lot of things in title escrow are going to be required just to make sure that title's clean, title's clear. You have your consumer protection letter that is, again, just assuring that the title company did everything right to protect the buyer, lender, and the seller, or the insureds and the insurers, from any title problems. Title problems being any boundary line disputes, any building code violations, any disputes with ownership, title defects, adverse claim possessions of someone legally owning the property when they've been in the property for a certain statutory amount of time and they then own the property. Things like that. Agreements to use the land that the seller and their neighbor agreed to. Things like that. So we just want to make sure that that's all covered and the buyer isn't going into anything that is a red flag. Okay. Then there's the chain of title fee, which again goes through that ownership chain and assures that there isn't a chink in the chain of ownership. All right. From the time really that the property was in existence, it could be a certain amount of time, but typically it'd be like 24 months, but even further than that. And then a commitment update fee. That's like kind of like the gap between the closing or the under contract and the closing to make sure that there aren't any defects, and the date closing happens and the date of recording. Okay, recording just means that the deed's recorded and that's when you're officially the owner, okay, in the eyes of the world, really. It's a public recording in the recorder's office in your state, okay, or in your county. All right, then you have the CPL fees that I was talking about that the title company charges, and then the e-recording. So sometimes your deed will be, and mortgage will be e-recorded. The title company will do that. All right, the email packaging fee. It's funny, the fee for emailing. I wish I could charge for sending emails, but that's what the title company charges. All right, escrow fees. All right, that's the escrow fee or settlement fee. That's the fee for the title company to facilitate their escrow and title services. Okay, and that just depends on the purchase price, really. Okay, the certificate of service for your state, any state required fees, that'll be there. The lender's title insurance, that's there as well. That's on the buyer side. And then the seller has to pay, depending on the state, pays for the owner's title insurance. All right, so that covers the buyer if there's any issues with title. Okay, so the title company and seller would then defend the buyer if there were any defects. So that's what that policy does. It's a commitment to ensure the clean title. Okay, and then you have wire fees and title indemnity fees if there needs to be anything held back. All right, tax payment services if the title company's paying the taxes or paying some sort of fee. Okay, and then I should state also that there may be credits, like with any sort of, this goes with the financial considerations at the very top, but we talked about that a little bit. Credit, I just had that in my mind, but that's basically it for the main things. And then you'll have your government charges. Sometimes it costs to record the deed in some counties, so keep that in mind. 7 per document. Mortgage and deed, if there's a second mortgage, it'll be another one. That'll be like 107 or something like that. And then your transfer taxes. All right, if you're transferring into Chicago, you have to pay a fee. In some municipalities or townships or villages, you won't have to pay anything. The seller will have to pay their transfer tax, pay fees along with the seller. Okay, and then you have your county transfer tax and state transfer tax. All right, and that should be like somewhere it depends on the county, honestly, but it'll be somewhere between and it depends on the purchase price, but somewhere between $1,000, $2,000, $3,000, depending on the purchase price. And then you have your homeowner's insurance premium and the miscellaneous charges. So we talked about how insurance is paid monthly if you have a loan and it's in escrow. So you put down the full amount as well, and that's held in escrow, and that covers next year. And then after that year, the escrow would have already been accumulating monthly insurance payments. So when 2028 comes or the next year comes after the first year, you're already covered. And that escrow kind of works as a cycle. You'll make your monthly payment with escrow charges, and that escrow will cover the necessary payments when the taxes are due and the homeowner insurance due, etc. All right. And then the commission. So then you have your commissions, all right, to the listing agent, and the buyer's agent, which should be negotiated beforehand and signed and agreed to. Make sure that that's transparent. There are laws now that require that transparency. Okay, then you'll have your attorney fees if you're using an attorney. Okay, that should be reasonable. And the other miscellaneous fees, reimbursements, things like that. All right, and then we get your totals. So you'll have totals for the cash to close. So you'll have your totals with your credits all combined, and that'll get your cash flows on the borrower side. And on the seller side, you'll have your proceeds, which is the debits, the credits minus the debits. So that gives you your settlement statement, your closing costs. So it depends. Sometimes even if you have like government assistance or down payment assistance, then you'll sometimes receive money at closing. Because if you notice, if you have enough credits that override the debits, then you're going to get debited money. So, that's just how that works. And it sometimes comes as a surprise, but, to speak with your lender, you may be able to get this type of arrangement depending on your income, status, etc. Communicate with your lender. We can match you with the lender if you're looking, or, just if you're looking for properties, we can help you. If you have any questions or if I missed anything, you know where to go. Go ahead and give me a comment in the chat there. You can subscribe and like, comment. Let me know the next topic you'd like to discuss. Again, always happy to answer questions and help. All right, this is a quick episode, but I hope this was helpful, and happy to see that you're listening and staying for the long haul. You're a homeowner, investor, you're an amazing person. You can reach out via LinkedIn, Instagram at Curington Now, Curington Law, all right, LLC. All right, thank you. And disclaimer here, you all, this is not to be taken as a creation of the lawyer-client relationship. This is just general knowledge because I love you. Thank you.